personality. I don't know if I have to present them, actually. I think everybody knows. I'll do a quick, thank you very much for the water. I'll do a quick introduction, but frankly, we just want to know what they are doing with their institution. Of course, you know Thomas, you just heard about the project from the SNB. We are very happy to have Marco as well as head digital. I think SDX was a pioneer in this area. Eden, thank you very much. I've been moderating a lot of panel with BIS, but I'm very happy to have you for the first time. We haven't had the time to exchange so far. And Paolo, I think you've done so much for Lugano that I can't actually present more than just it's Paolo. If you don't know him, actually you didn't see what happens in the past in Tessin these past years. So thank you very much for the panel today. We don't have that much time, so when we exchange together, I ask to have 2 general questions from my panelists to see where we were going. And interestingly, I see 2 major leads. One is actually more on assets and tokenization of assets, actually, and more on payments. So I'll do 2 rounds with my panelists, more on these questions, and I'm very, very happy because it's not just hearing from public institutions or the Swiss national banks, but it's also about the conjunction and the synergies between private sector and public sector. So thank you very much for having the time to discuss a little bit what happened. I know we heard a lot about Thomas, but I will ask you first the question because I am very interested to hear more about what you've done with SDX, what you are going to do with BX, actually. So can you give a little bit, for once we go a little bit outside stablecoins and we spoke more about tokenization as assets. Can you explain a little bit more, Thomas?
Yeah, so SDX for us is really a very good and very interesting use case of wholesale CBDC because we really believe that settlement in central bank money at the wholesale level is really necessary, especially if you have large value payments just for the security of it. And that's also what the banks tell us. You know, the banks tell us it's very important that at the wholesale level we can settle in central bank money. And SDX has been providing the technical platform, very luckily for us, so we could test that very early on in a real kind of production environment. And that's also why we were so fast going live. And actually we also implemented a monetary policy operation. That was the first worldwide monetary policy operation on a live operation on a blockchain. And that was when we issued our own digital securities, SNB bills, which we do to withdraw liquidity. And we did one of these bill issuances on SDX, which became the world's first monetary policy operation on a blockchain. So this is an important project for us. And as I said, BX is also interesting because we always said there would be this other possibility to have the link, but there was no demand for it. And now with BX, there is a demand. I'm not sure whether they in the end would also like to have the wholesale CBDC, but given that they are on Ethereum, I guess they figured out that it would be a little bit more difficult for us to take that step. So they start with this link. But it will be interesting to see what are the limitations if you do not have everything, both money and security on the same platform. What kind of are the limitations that you have in terms of using of smart contracts or maybe other issues? So it will be very, very interesting to see basically a little bit of I should say, a horse race between BX and SDX.
You know, I think in the past 3, 4, 5 years, even 5 years, each time it was about, yeah, we can tokenize securities, we can tokenize bonds, but we are missing the cash leg. So this is coming actually as a synergy between SDX or BX and the National Bank. Which is interesting for me is to have actually your view as an international institution. are we going in the same direction? Are we seeing merging between the cash leg for settlement and also private sector? How do you see it, Aidan?
Yeah, thanks for the question. I'll maybe build on what Thomas was describing. I think both options are viable. So if you have the cash leg on Ledger, or if you integrate the cash leg, I like the framing of SDX versus DX and those two kind of operating models. At the end of the day, they both work. But as a general thesis, when you think about the value of tokenization and the value of blockchains, the more you can harmonize the format, the more composability you get, and the more programmability you get, and ultimately the more settlement security you get, because you can create these atomically linked transactions. So I would propose that as the kind of best solution from a technical level. And then, policy, governance, things like that are always more complicated, as maybe Thomas alluded to in his opening remarks. But ultimately, tokenizing the cash leg and tokenizing the asset leg will give you that atomic composable transactions that I think the industry is really looking for. Where that lands in terms of public, private, what happens in the public space, what happens in the private space is maybe something we can discuss.
So would you go into a direction when you think there should be harmonized standards for this kind of synergy, so that it's a better adoption in terms of procedures and guidelines?
Well, I guess
I didn't ask you.
No.
I'm very.
That's a good question. Maybe I'll say that as someone from the BIS, I have to say I only represent my own views and not the views of the BIS. So anything about standards is something that we need to be careful of. But when we think about standardization at a technical level, in terms of platform standardization, interoperability, things like that, absolutely yes. The more interoperable things are, the more composable things are, the better they function at large. Of course, with certain considerations of circuit breakers and frictions that are necessary.
Mm-hmm. Yeah, it's always this balance between trying to find a standard harmonization and not just killing the innovation in the egg, what happens actually on the private sector, which leads me perfectly to you, Marco, on how you've been working on this issue. And I would say journey, because I guess it's a journey.
Thank you, Biba, and thanks, everyone. Yeah, you mentioned pioneering, and yes, at SCX we've been pioneering in the private sector since 2018, the area of regulated digital assets. And first of all, before I even start, I would be amiss if I didn't recognize and also thank the public sector, and very happy to sit here between public sector representatives for the collaboration, great collaboration in the projects you saw before, and even others, of course. It's really necessary, otherwise one cannot go alone at it, so to say. Now, on the adoption, I've been in this space since, as I said, since the beginning of, at SDX at least, 2018, and I've seen a lot of evolutionary steps in this journey. Speaking of pace of adoption, from my standpoint, from my point of view, I can see a huge acceleration. I can see that the topic is really coming into the business use case, where it's moving from, let's say, research and proof of concepts into scaled adoption. And here you may have read about some announcements we also did recently of supporting the investor base at large to access pre-IPO markets, for example, in a much more effective, simpler way. And this is leveraging technology. It's not only us, it's not only about SCX, it's about the ecosystem, also what happens before and after, obviously. Or likewise also enabling mass customization of scale in terms of investment strategies. These are all, I always say, these are all old problems. They're not new problems whatsoever. Yeah. But we can find new solutions to address the problems in a better, more efficient way, faster way, more creative way, maybe even. And I mention this because as a private sector representative, we have a special role, I would say, as infrastructure provider, we have a special role of convener or gatherer of different parties. And we look, obviously, at the public sector for enabling scale adoption, what I mentioned before, with high quality, best quality settlement assets such as wholesale CBDC, but we look at financial institutions to come and define their use cases on how to actually use it, how to make use of it in a concrete way. And it takes both of these elements, and many more actually, to make it all work. And so coming back to the adoption, I think this is what is happening now, where you have those different pieces of the puzzle coming together to concretize on a use case, on a real use case, and to put it into action.
That gives me a perfect transition because we spoke more or less about the issuance, okay, primary market. You are actually linking to the adoption for the ecosystem. And that gives me actually the perfect transition to you, Paolo, about the adoption. Because it's nice to have issuance of financial instruments, but if there is no market, if there is no adoption, then it's just for the art.
It's for nothing, yes.
So what do you, how do you see
That is true. Well, first of all, I would like to thank the CVA board for inviting me. This is my first CVA conference. Amazing, and thank you to the team, organizing team, because you are really amazing. It is true. I mean, to be seated here just next to Swiss National Bank, SDX, and BIS Innovation Hub is just amazing. So why Lugano is there? I mean, it's a small town, southern Switzerland, and the big institutions here. We never participated to develop the technology side of all this big topic. But we have done something that I think is equally important, is adopting. If everything is ready and nobody's moving, it will take years before to adopt. And this technology, in the technology sector, is always like that. Adoption comes later. So what we have done in Lugano is to start adopting as soon as possible, since Lugano has this plan to become an international hub for adoption of blockchain and crypto. Well, when I saw SDX was ready in 2022, I said, okay, let's do my next bond on SDX. Well, honestly, it took me 6 months for the first one, which normally for the traditional bond, it took me maybe an hour or two to get ready. Why? Well, you have to understand the platform, the process, the rating process with Moody's, which was, at the end of the day, was the very big, let's say, time-consuming task. But after 4 to 5 months, we reached the point to say, okay, we are ready. We decided that, we didn't decide, we said that the rating was the same as a normal bond, using normal bond as traditional bond. And then we just issued it. And after the first one, we did a second, a third, and a fourth one. Actually, the fourth one like 3 weeks ago. And now it takes me an hour to get ready. I don't even notice that we are settling in CBDC, which is amazing if you think about it. I think we are unique. It's unique in the world right now, this kind of settlement. And to me, adoption is no more a question of adoption, it's just a new standard. To me, it's just digital bond is the way to go. A couple of years ago, they were interviewing me, say, are you going to issue new bonds, digital bonds? Why? I say, why not? The real question is why not? I mean, it worked very well, it's perfect. Then the second one was in CBDC. I haven't even noticed that something changed for me. For the banks are the same, for the investors are the same, so why not? I mean, I'm not going back to the traditional, there is no reason. And we are continuing adopting this. I feel some public institutions, I'm talking about cantons and cities, I have good connection with them. I was the former treasurer of the canton of Ticino, so I know many of the treasurers of the cantons. They're still thinking, they're still looking, we don't understand. But there is nothing to understand. It's just the same procedure. You launch with the lead manager, they issue the bond, you get the money, and that's it. So for the issuer, for the adopters, now it's time to go, because there is no difference on that.
Yeah, but you've been a pioneer in many things, not only financial instruments, you also issued a payment token from Lugano. I mean, that's another, that gives me also the transition to actually the second one. But I mean, that's also some kind of a risk taker. I don't think that any other cities have issued payment token.
So the digital bond was not a marketing stuff. It was real adoption. Lugano has a broader plan, which is named Lugano's Plan B. It is a plan of adoption of blockchain and crypto, generally speaking, for the public administration, so for the city itself, but also for the city economy. So we are really pushing blockchain and crypto in the whole economy, which means we have a lot of projects from education to payments. We are accepting Bitcoin with no limits, with all the city's invoices, etc. And one very important project, which by the way is the very first project in blockchain we have done back to 2020, is a payment token, which is the Luga. The name is the Luga, and it's a part of a cashback system in the city economy. You can only gain and spend in the city economy. Everybody can download the app and get the Luga token and spend the Luga token there. But it's only spendable in the city. So it's kind of controlled, programmed programmable money. This is amazing because after 5 years, 4 and a half, we have now 22,000 users, active users. Most of them, they are from city and the region. We have some thousands of international because everybody can download. So our tourists come to Lugano, download the app, is ready. Then we have KYC in this kind of procedure, but this is something else. And then we have 430 merchants accepting Luga and paying out Luga because Luga is a part of this cashback system. Everything you spend, every amount you spend in a shop, which is part of the circuit, you get 10% cash back in Luga, not in discount, but in Luga. And then this Luga can be spent in the other shop. So you spend 100 francs in the restaurant, you get 10, you spend at the hairdresser, the 10. So this is very amazing because we keep the economy there. We increase the economy. It's a circular economy and closed economy. The city of Lugano provides the infrastructure. So we have our own blockchain. We have our own KYC. We have KYC 20,000 people, so you can imagine the work. So it's probably the only one city in the world doing KYC like that. And then we provide the security that the merchants can exchange back into Swiss francs their token, because once they get a lot of token, then they have to use it francs to pay their let's say, suppliers, because Luga cannot really be spendable in the large scale. It's for small scale. So this is not a stable coin in the sense that we don't segregate the amounts. We just in the balance sheet. It's very easy, but Lugano has a $500 million budget, and the circulating Luga today, the net circulating Luga is like 500,000, 600,000. So for us, it's really nothing. One day, if we will have like 10 million in Luga circulating, then we have to probably segregate the money in the very sense of, backing the stable coin behind this. So this is an amazing project. I think there are no other projects like this at this scale around the world.
That's kind of impressive. You said it's not a stable coin, so I'm asking you, when are we seeing a stable coin backed by the SNB?
I mean, if we do it, CBDC is not stablecoin. So the stablecoin is really something that the private sector has to do. I mean, if a private sector issuer wants to back the stablecoin of central bank money, there are two ways. I mean, you can get a banking license, then you can have an account with us. You can go for a fintech license. You can also have an account with us if you're in the payment business. So that would be something to do. May I add two things on what just Paolo said? One thing is it's really a fascinating project. And I think one thing that they did interestingly too, they integrated a payment card into the blockchain architecture. That's something central banks are talking about. How do we include people who do not have smartphones? They show how you can do it. And so that's one thing. And the other thing is Lugano is now issuing all its bonds on SDX. And we actually allow these digital bonds to be used in repo transactions with the Swiss National Bank. So banks can, and they do use them. So sometimes you hear internationally too, central banks should allow these digital assets to be used in repo transactions. We are doing it. And the bond of Lugano is a perfect example that is being used as a security, as collateral in repo transactions with us.
And how do you see the adoptions coming on this specific side?
I mean, Lugano now, the first city in Switzerland that does all bond issuance on SDX. Others have just tried it out so far. I mean, I'm still hoping that we will see more and more issuances, and the more securities, digital securities you have, I think the more will also be used in for other things like repos.
Did you see the same?
Yeah, well, absolutely. I mean, I forgot to mention before when talking about adoption, but, it used to be that we look at, the next issuance, with big eyes and celebration. And now, like Paolo said, from the other end of the spectrum, so to say, of the issuer entity, it's just business as usual. I mean, just this month we have three bond issuances happening. I honestly don't even know exactly which dates, and I don't care, to be honest. But no, because it's just normal business, BAU, business as usual. And so I think, I mean, this is on the one hand it's like an engine for me, It starts before you get to move the wheels and get to your destination. A lot of pieces have to start moving. A key piece is to have digital assets, digital securities, and to introduce them into the BAU, into the normal, to make them a normality. And this is what we're seeing now with more and more issuances. Like I said, now 3 happening, and maybe there will be more coming. Even I don't even know this month still. But then the point on top of it is, people ask me why people issue digital bonds. First answer is why not? It's a great answer, by the way.
It's a bond.
And the second answer is, well, you need to start with the building blocks. If you don't have the building blocks, how do you even can think about the next gen other things? So you need to bring assets into the digital space. You need to find a way to do that. And this is what is happening, what we see happening. And and now we are in the tipping point where we can see how to use those assets that are digitalized. And that's where I think the concept of programmability, we mentioned, it was mentioned before in the keynote, it was mentioned here, it plays a huge role. I too look forward to this horse race, to be honest. I mean, people ask me sometimes, well, what do you think, BX Digital and so on. I wish them really best of luck. I'm excited, equally excited. It's a different business model to what we have. I'm honestly excited to see them launch and see adoption being taken up also there. I think it's very important. But to me, a key difference is when you have the cash leg you mentioned earlier and the asset leg on ledger, on the same ledger or at least on the same, let's say, technological sphere, that's when you need to unlock the programmability aspect and composability aspect. This will be the proof of the pudding, so to say. And I feel we are coming much closer to this proof of the pudding, and that's where we need to go.
Yeah, that's.
May I add something on this? Because as my first bond was done by Zürcher Cantonal Bank alone, at that time only 3 banks were in the circuit, and I could work only with one. Not telling the story, but at the end I work out only with one bank, so which is a risk. By issuing 100 million with one bank, a digital bond, new one, etc. Then the last one I got 5, 6, 7 banks where I issued let's say I sent the offer. So you have a broader. So banks are onboarding now SDX. Yeah. I don't know how many banks and institutions you have.
It's 14 now with 5 in progress. So
how many?
14 banks onboarded on the CSD, on the post-trade side, with 5 in progress. So in a couple of months they will be also there.
Which gives more resilience to risk, typically.
So this is very important for an issuer. That maybe that was the people scared about issuing only with 1 or 2 banks in competition, because it's a competition for us. We send out our request of offer and then we get the best offer. But then, if you have more banks, then you are really comfortable and scaling. Yeah.
And Marco, are you seeing it's more Swiss banks, or do you see that it's something that comes internationally, which provides also adoption and resilience?
Absolutely. No, it's. I mean, I think we have still the majority of the onboarding banks are Swiss, and I think that makes sense, and it's very important for the Swiss financial sector. But we do have already international banks onboarded, like Commerzbank, for example. And we are, you read the announcement, so it's now finally out in the public. We are onboarding also Citibank. And interestingly, it's not the Swiss branch. It's a branch in London and in New York. So, and we are working with obviously a lot of other European and even intercontinental banks. Yeah. So this is great, because what we talk here, of course, has also geographical spheres. And again, coming back to the programmability or use case, or to be honest, the real question is why? Why to do it? What's the point? And in order to answer, or to come close to answer that question, you need those elements to come together, both from a capability point of view, CBDC, wholesale CBDC, for example, but also from an ecosystem point of view, including internationality, like the projects we heard before about Project Agora before. That's a perfect example of that.
There is maybe one very important point from the issuer point of view, why we should adopt digital bond for all the bonds, and actually tokenize the old bonds back to digital. But that's another question.
We are working on that too. Yeah.
It is the cost of issuing a bond. When I issue a bond, I have between 300 and 400,000 francs costs. I'm not talking about the spread, just the costs. Pure costs. So today I don't earn anything on issuing digital bonds, because I'm not expecting now is to still at the beginning, so the infrastructure is there, they have to amortize the infrastructure. But in the future, I'm expecting from the banks that my bond costs maybe 50,000, 100,000, because if it's really more efficient, which is, you cannot justify me 300,000 francs anymore.
Did you see the cost each time reducing for when you issued the bonds? Each time you did the issuance, did you see a little bit the
No, the costs are the same today, and I'm not expecting today this, because there's really few bonds, the infrastructure costs, the people are not trained enough, etc. So I'm not expecting, but in 5 years, they have to reduce the cost if it's more efficient. So in blockchain is efficiency, transparency, less risk, etc., etc. So this is important for the issuer to adopt now, increase the number of digital bonds so it becomes completely efficient. Then we will see the reduction on the costs. That's very important.
You see it as well. I guess from an infrastructure perspective, it's the same. You see it as well from an infrastructure perspective, the reducing of costs.
But I won't comment on
No, yeah,
pricing
they
or
can't.
similar. I can't and I won't. And it's also, as they
No.
rightly said, our customers are banks, not the
Right.
direct investors and issuers. But indeed, I mean, the whole point of among others to reach higher efficiency, more automation, decrease risk. Risk has a cost. Everybody in the industry knows there is a big dollar sign or Swiss franc sign attached to different levels of risk. So yes, that's for sure the ambition. For sure the ambition.
Well, we have 5 minutes. Should we speak very quickly about Promissa? Where we stand? Aiden, where do we stand?
Promissa. Well, I can maybe try to connect Project Promissa to the discussion around digital bonds and why not to your narrative. So Project Promissa is a project with the Swiss National Bank and the World Bank and the BIS, and actually the IMF is also an observer on the project because they share a lot of the similar pain points and use cases. And the project really looks at these promissory notes that are currently done on paper with a lot of back and forth and different formatting and a lot of reconciliation between the ministries of finance that are donating, the central banks that are effectively operating as custodians and payment agents, and the multinational development banks that are the recipients of these funds. So Promissa takes all of that, tokenizes it, and puts it on a common platform. And the idea is very simply, it's kind of the issuance of this promissory note that in a way is a simple form of a bond. There's no secondary markets and things like that. But it lasts over maybe 5 to 10 years, and it's slowly drawn on, and those funds are used for specific purposes by the development banks. One thing immediate is you can take all of the operational complexity and reduce it to a very, very simple, streamlined process, and I think that this echoes the efficiency and effectiveness of that kind of thing. But maybe a couple points that shouldn't be lost when you actually think about the future of a project like this. When you scale it up to multiple countries and multiple development banks, it scales up beautifully as a distributed system. So the same complexity that you would have issuing one promissory note with one development bank, you could have hosting hundreds of notes against many banks, and it scales beautifully in a distributed system that preserves privacy and things like that. So there's one problem kind of when you just look at the tree, but when you zoom out and look at the forest, the solution becomes even more compelling, both to the central banks and to the development banks. The other side is the cash legs. So today these promissory notes are drawn down. The cash legs go through all types of different mechanisms, correspondent banking, different banking relationships, depending on which countries are the contributors. In a world where we have cash on ledger, potentially the cash leg, the efficiencies on the cash leg will also be increased tremendously. And then maybe I can come full circle and talk about user adoption. It's one thing to think about the volumes and scales of how promissory notes are used today to fund international development. If we do our work correctly with Promissa, and Promissa goes into a minimum viable product and hopefully into production, barring all the governance and considerations that are happening right now, what we could actually see is more funding going through these instruments to multilateral development banks, and ultimately that's a good thing for everyone. So I think that's a really, really great, simple use case at first, but it scales up really well, and it's doing something good for the world. So it's been a pleasure working with Thomas and his team.
Then you could follow on the project that are invested through the cash, I guess, the whole, because the idea is then to invest on these projects, right? So you can have both ends, the contributors and the project in several countries, if I understand.
Yeah, that's correct. That's correct. So we're working. Thomas, you want to supplement?
Thomas, you want to?
No, exactly. But I mean, the technology is beautiful. It works. The big issue, as often, is now the governance. You know, who steps up as the owner of the system? How do you set up the governance across different jurisdictions? That's the big headache right now, not the technology.
When you were talking about that, and that echoes what you were saying, I was thinking that typically that could be fantastic for the EIB, the European Investment Bank, that has multiple projects, infrastructure projects in upcoming countries. So this is typically where...
Yeah, I can build on that for a moment. So really we're looking at the inbound flow of funds at the moment. Really the connection is to also connect it to the outbound funds and the actual funding itself. And it would be great for these ministries of finance, not just to say, we're donating this amount of money over the course of this time frame for this cause, but actually to see those funds flowing out and the things that it's impacting directly. So when I look at like green bonds, some of the work that we've done on green bonds, for example, as part of the Innovation Hub at the BIS, we've created similar constructs. You can look at your green bond portfolio, for example, and actually see the impact of the bond, so reduce the greenwashing and things like that as well. So connecting it to these sources of data is...
Connecting to the private markets, actually.
Yes, yeah.
Fantastic.
But that's not in this phase yet.
Yeah.
Too bad.
May I add, Biba, just briefly on Promissa, we've been following a lot the developments and culminating with the report published, indicated earlier. You see me sitting in these color chairs very often during the years talking about use cases and ecosystem and programmability I just did earlier, and it's all correct. It's all absolutely correct because I have the capital markets view. And let me tell you, it's a complicated ecosystem, obviously, because of the different parties and agents and so on. Therefore, coming to those use cases, really, to respond to the big question, the model of all questions I mentioned before, takes time and complexity. Here, I find Promissa has the opportunity of being, I call it simple, but a highly sophisticated and effective use case, which can really showcase the benefit tangibly. You can actually touch it, the piece of paper, no? You can touch it with your hand in a much more direct and simple way. So I'm hopeful that there will be a future for this kind of project, because I think it will help also, again, the adoption of the concept, at least.
Is it something we can read about? It's on the...
So the report, the proof of concept report is published, yeah? And now we are thinking about the next stage.
Okay, good. Well, we are already late, so thank you very much. It was really interesting. Thank you, guys.